Hi, good morning. Welcome to Market Wrap number 204. Stuart Williamson here at the helm. Now this week we're going to look at some pretty exciting stuff, i.e. the OECD saying that the UK should perhaps get rid of stamp duty, what a move that would be. And then secondly, look at the interest rate Monetary Policy Committee meeting this week, what came out of that, and a smorgasbord of other areas. So firstly, what's going on? Interest rates yesterday were held at a 16-year high, so the same level it has been now for some time, 5.25%. Why is that? Well, basically, the Bank of England says, although inflation is showing 3.2%, and it's probably down to closer to 2% now, and they're likely to hit their target, they don't want to overreact. I think the effect of what's going on in the Middle East and the Ukraine, oil prices have been going up, as we've talked about before, and that could have a very serious effect on inflation in the UK. So I think they're hedging their bets. The voting was 7-2, so that's higher than before. So 2 wanted to change it, 7 didn't. But what you need to look at really is, they're saying, Andrew Bailey's now saying that interest rates will fall 3 times starting in the summer. And so it will be down to 4.5% probably by the new year. But they don't want to rush into it. But the thing you need to look at though is what do the banks think? And that's the crucial thing. And that's what's happening with swap rates. And swap rates are basically futures for mortgages. So what they think is going to happen in the future. And I think we're going to see swap rates falling fairly quickly because it has been now accepted that that's going to occur. So that's very positive for everyone. It's one of the topics I get asked about a lot. I met a gentleman this week who'd been offered a 10% mortgage just a year ago. And that was crazy. But if you look into it, if you speak to a good broker, you can find proper 5.5%, 6% mortgages even now, and they will come down, as I said. Another major talking point that has been brought up quite a few times this week has been what's going to be happening at the election. It would appear that Labour are going to win it. If you look at the council elections that came up this week, and I saw that another Conservative MP had walked across the floor to join Labour. So if that is the case, then what effect will that have on house prices? It would appear, according to Knight Frank and their recent survey, that they are more positive, that builders are more positive about Labour getting in because they have more of a crystallised plan for what they would do in the housing market post-election. Whereas as ever, the Conservatives seem to be still a bit NIMBY-ish, not in my backyard. And you can see that, but having said that, is the devil you know or the devil you don't? And I think really that both Conservatives and Labour, they're very close to the centre now. I don't think they would really do a lot to help the housing crisis. They haven't got the money to build a huge amount of houses. It'll be more of the same, I believe, and the housing shortage will continue. There are very positive signs coming out now for developers. Knight Frank in the same survey, getting more visits, getting more reservations for new build. And to be fair, we are seeing that ourselves. And quite a few of the people we work with seem to be moving property a lot more quickly. A very positive area that seems to be going very well is the student housing market. The student housing market, the government went out after Brexit and focused on international students, and they've done that amazingly well. One of the things they have done quite well, and so they have attracted a lot. And after the US, the UK is the second most popular place in the world for people to come and study. So there's a huge shortage in student accommodation. That's been plugged quite easily with centralised funding in places like Oxford or Cambridge or London, the major cities. And you've got a lot of the big pension funds basically setting up a student accommodation because it gives a guarantee, normally between 7 and 8%, fixed guarantee for 12 months. And students today are a lot more careful than they used to be as far as looking after property. When I was a student, it was a pretty horrific experience living in a house. But nowadays, it's all soft corners on tables, it's all fast Wi-Fi, they've got gyms. Apparently, the communal space in student accommodation has gone up by 40% since they started doing PBSA, purpose-built student accommodation. So there's a lot of investing going into that. But you can also do it yourself. So you can invest in it yourself by going and just buying a unit in a block. And that's what's happening in the secondary cities. Places like Bradford, Nottingham, York, because there's not so much central funding and there's not so much of the big pension funds coming in and buying up these places. So student housing is very positive. Builders are seeing more activity for buying new builds. We're seeing generally more activity in the market in total. Interest rates are coming down, not now, but they will do. And then the OECD has jumped in and said, what's the bigger picture for the UK? Well, it's got a 3% global forecast for 2024, 2025 for GDP growth, which is showing a lot more positive than it has been. And then in a rather bizarre quirk, they've come out and said that they believe that tax on property in the UK should be re-evaluated. Not entirely sure why the OECD is getting involved in this. And to be frank, I don't really see the point, because stamp duty will never be got rid of. If anything, I think it will double after the next election for international people. I think we'll be looking at probably a 5% from 5% to 10% on a buy-to-let as an entry point, because that is politically correct for any of the political parties to do, because it's punishing wealthy people buying from overseas, and they would like that. So I don't really buy the OECD thing. Finally, the Savills have come up with a great bit of research saying what they think will happen to UK property over the next 5 years. Basically, they say the UK should go up by 21.6% over the next 5 years, and the big growth areas being Northwest, Yorkshire, Humber, West and East Midlands, all doing 20% plus. So it's very positive. Obviously, they've got skin in the game, and they're bound to say it's positive because they're trying to sell property themselves, just like we are. But it is positive, and it gives that positive sentiment that we talked about last week. Interest rates falling, positive feeling out there, which is very good. So that's it for this week. Thank you very much for listening, for watching. Do have a good week. Take care. Do like if you can, subscribe, and share the love. Thank you very much.